Earlier today, dollar yen finally pushed through the much talked about 150 barrier, though the event was rather uneventful. We saw the major pair trade up to as high as 150.08 before retreating modestly back below the barrier. We thought there could be a bigger run up through the barrier on possible buy stops being triggered. But if those stops are indeed above the barrier, they are a little bit higher up than where we've seen the market run thus far. At this stage, there appears to be plenty of demand and no sign of official additional intervention. In fact, overnight, the Bank of Japan announced another round of emergency bond buying as the 10-year yield rose above the ceiling. And as far as excessive movement goes, we continue to hear officials speaking up against such moves, but no official action as far as we can tell. And if anything, monetary policy in Japan continues to lean towards more yen selling. Elsewhere, China held off releasing monetary stimulus by keeping its benchmark lending rates unchanged for a second straight month. Over in the UK, it's been about the loss of confidence in PM trusts, with some saying odds are even against her lasting another day. And echoing a report we heard out of the ECB last week, BOE Broadbent was out saying that it wasn't clear that UK interest rates needed to rise as much as markets were factoring in. Also getting some attention was a report that calculated trade from the UK to the EU was 16% lower than if Brexit had not happened, while EU trade to the UK was down 20%. Looking ahead, we get U.S. initial jobless claims, the Philly Fed, existing home sales, and some Fed speak. That's all for now.